Hey guys, it's Scott Horne. We're going to take a minute and just talk about things that you need to be considering to have in an owner finance contract. So if you find this helpful, take a minute and like it. Don't forget to comment below. If you have time, take a moment and subscribe to our YouTube channel as well. Now, the first thing I always like to talk about is I like to use a state promulgated contract, not some guru's contract that they try to make useful for all 50 states. And then I want to supplant that contract with proper disclosures. But you need to know what is it you're looking for to be in these disclosures and in your contract. Now, most contracts that are promulgated are not for seller financing. Even seller finance addendums of contract are not designed for seller financing. Now, here in Texas, things are very problematic because there's a lot of things that need to be put into our contracts between a seller and a buyer. And it doesn't matter whether it is an investor buying from a seller or an investor selling to a home buyer. There are disclosures that are required in both of those. But there's other things that should just be included. So first and foremost, take the time to read a contract, the contract that is used in your state. If you've got a standardized contract, know what it says, know what goes where, and get a good feel for that. If you don't know about it, go talk to a local realtor, talk to a title person, talk to a real estate attorney, and just see if they'll take a moment and just walk you through that deal just briefly to help you understand a few things. And maybe you can get a little bit here, a little bit there, but that knowledge will help you out to know what to always look for and navigate where to go. And if you're going to utilize a third-party contract, you'll know what at least should be in there or not. There are reasons why states have promulgated contracts. It's there to protect the seller as well as the buyer. Now, when we're doing a seller finance transaction, what we want to do is, if we're buying it subject to the existing debt, there are certain things we should be talking about for disclosure, versus if we're selling a property with owner financing to a back-end buyer, there are certain disclosures. But generically, there are a few things that are out there that should be in everything. Whenever an existing mortgage is being left in place, the most problematic issue out there is that thing called the due on sale clause. And what we want is we want our sellers, our buyers, everybody to understand that that is there and what it means, because that's what usually scares the bejeevers out of everybody is, oh my gosh, they call a loan due. I don't have hundreds of thousands of dollars to pay this thing off. I don't want to get foreclosed on. So understanding due on sale, how it works, what it is so important when you explain things. And just briefly, guys, due on sale is nothing more than a contractual violation. There's an adage out there that says there's no due on sale jail. It's not illegal by any means. Many people think that's illegal. It's not. It's just a breach of a contract. That's it. You know, the worst thing they can do is, yeah, they can call the loan due. They could foreclose possibly. But when you realize that lenders want one thing, they want their money, they want the deal handled properly, and they don't want to own that property. When lenders take back houses, they typically lose tens and tens of thousands of dollars. Knowing how to properly explain that is so important, you know, along the way. So besides the due on sale clause that is so important, if you're buying a home from a seller subject to the existing debt or a wraparound mortgage, whatever that might look like, ensuring that that seller understands that their loan is not going to be paid off is so important. So often they think it's going to be paid off. In fact, just the other day, I get an email from a seller that I bought a home subject to from a year or so ago asking, why is this loan still in my name? And of course, I had to refer him back to the paperwork and explain the basics in a nice way to him. And he got it. But I'm just going, oh my gosh, he knew exactly what was going on. They have short-term memories, and this always happens that way out there. So due on sale, number one, having the seller acknowledge that continuing liability, where we don't make any promises that this loan's going to be paid off in 6 months, a year, 5 years. No, it's going to get paid off when it's paid off. Now, I will tell a seller things like, if I sell a home with owner financing on the back end to somebody, well, the average time somebody owns a home here in Texas is between 4 to 7 years. So could there be a good likelihood that the loan is paid off that time? Absolutely. Could that borrower refinance the property? Absolutely. All things could happen. But at the end of the day, I make sure they understand that it will be paid off when it's paid off, and to expect and anticipate it'll be paid off through attrition with monthly payments along the way. So from there, besides those things, there are other details that are so important to understand. What type of title evidence is needed as the investor, as a buyer of property, or maybe a homeowner who's buying the home? Do they want title insurance? Is an abstract of title sufficient? What's available even for your particular transaction? Is a simple title search sufficient? Every seller, every buyer is different. Their needs are different. Their risk aversion is different. And you don't ever want to tell somebody what to do. Maybe give them information so they can make the best informed decision along the way. So once you get back past title insurance, it's disclosing how to navigate and handle things like insurance. And talking to an insurance professional about how to handle a subject to insurance policy, how to handle a wraparound policy, is so important to ensure that you have proper coverage in the event that there ever is some type of a casualty loss on that property. You want to ensure that the seller and yourself and any back-end buyer are always protected. Next is simple basics, because guys, sellers and buyers in our business don't know what we as the investor know. They don't know that they may be able to get financial information from that buyer, whoever that buyer may be. It may be you, the investor, or it may be a back-end home buyer. Do you need to utilize a loan processor? What is a loan processor? Do they have the right to use a loan servicer? Keep in mind, they don't even know that these things exist. They have no knowledge. They're not in our business. They're lawyers, they're doctors, they're Indian chiefs, whatever it might be. They're not in the real estate investment industry. You've got to take time to educate them a little bit. It's walking through common sense things that, ensuring that they actually own the property, that they have full title. So often we'll find in our business when we're dealing with an heir, they think because they're listed as the heir in a will that they now own the property. Even though nothing's been probated, there's been no conveyance to them, they think that the paperwork alone is sufficient to transfer ownership. You have a husband and wife, and maybe one passes away. Well, the surviving spouse thinks they own 100% of the house and can sell it without doing any probate work. And so it's basic things and disclosures to them so they understand it. Setting up expectations. Is there going to be an inspection period, an option fee? Is there going to be earnest money? Is that earnest money non-refundable, refundable? What does that look like? Now, most promulgated contracts cover that, but you also want to put provisions in there that will protect yourself, because every deal you do is a little bit different. Some deals demand non-refundable earnest money. Others, you may want fully refundable earnest money that may allow you to market the contract if that's your back-end goal, to wholesale it in some format. Having a reasonable closing date, reasonable expectations. Think about things such as who makes that next mortgage payment if you're buying a home subject to. If you're closing a deal, let's say on the 20th of the month, who's responsible for the August one, that next month's payment? Is it you? Is it somebody else? Is it them? Closing cost. Are you paying everything? Are you going to split closing costs? Is the seller going to pay everything? Every deal you do is different, and you got to make sure you address each and every one of these issues. Another thing I like to talk about, especially when we're dealing with a back-end home buyer on a wraparound mortgage, which doesn't come into play so much on a subject to or an acquisition by an investor, and that is there is no third-party mortgage company involved. You, as the investor seller, are the mortgage company. And there's certain things that you've got to make certain that your buyer understands what their obligations are. What is the contract price, down payment, earnest money? What's the loan amount? What's the interest rate? What's the amortization period, the term of the loan? Is there a balloon payment or not? What are the estimated taxes, insurance, other fees like a loan servicing fee? Who's going to pay for what? Who pays the closing costs and the various things? You've got to realize there is no lender that handles all of these things typically. Then if you're processing your back-end buyer, using an RMLO, you've got to realize that the RMLO is nothing more than an information gathering system for you. They're not the lender. You are. You're the decision maker, not them. All they can do is give you the information so that you are informed sufficiently to make that decision to approve your buyer or not. And so you've got to learn and understand all of the moving parts. So when you're looking at a seller finance contract, you know what should be in there, whether you're the buyer looking at one or you're selling it, so that you have a reasonable understanding. Then actually take the time and read the contract in full to know what it says. Don't just skim it over and think you know what it says or trust that somebody else said it is X, Y, or Z. Know for a fact yourself. And I'll find that it'll serve you very well when you do that. So guys, I hope you found this helpful. If you do, take a minute and like the video. Don't forget to join our YouTube channel, and we'll look forward to seeing you all next time.